Morning, everybody. Welcome back to Morning Markets on Thursday, the 4th of June. A couple of things that I wanted to share with you this morning. The first of which was just building on some of the things that we've been talking about over the past number of weeks and thinking about the importance of narratives and sentiment in the market as we speak. And as you know, we've been discussing four key narratives, if you will, that have been driving sentiment and driving risk appetite within the market. And that, going back to recap those, the fiscal support that we've seen come through from governments, the monetary liquidity support that's come through from central banks, data points around COVID-19 as it relates to fatalities, infection rates and medical advances, and then finally the reopening of economies. And I think if we look back over the past number of weeks, what's been the dominant factor that we've been working with? It's that of economies reopening and that gradual improvement. And that's been borne out in the PMI data that we've seen over the past couple of days that have been showing that improvement from the low in April. And I think also some of the higher frequency and more timely data suggests that as well. If we look at Open Table, the restaurant booking site, you can see on that some of the charts that just look at how restaurant bookings have obviously ticked up from the lows, albeit they're down materially on a year-on-year basis, but they do show improvement from that low that was established in April. And that improvement in sentiment, if you will, and the narrative around the market is clearly supporting some of the riskier areas of the market, or those that are perceived to be higher risk, or those that offer the potential for higher return. And we've seen that in equity markets over the past number of weeks, and particularly as we've seen it broaden out, both at a sectoral level, with some of the more economically sensitive sectors performing well, and also if we look at the performance of Europe and Japan. And that was a very similar theme that's held in the market over the past couple of days, and we've clearly seen evidence of that with the Euro stocks up another 3.5% yesterday, the FTSE up 2.6%. So both of those, if you will, showing some of that sentiment improvement, markets that had lagged the US. And then turning to the US, we did see a stronger performance there as well, but interesting to note that NASDAQ, that more growth orientated index, did lag, and very evident within that was the sectoral composition with financials, transportation, etc. performing ahead of other sectors, so outperforming on that relative basis. I think also yesterday we did see a little bit of backup in yields, so 10-year yields in the US and the UK did move out slightly, with the US yield moving up to 74 basis points and the 10-year gilt in the UK at 27 basis points, 28 basis points thereabouts. I think the ongoing story and the important story for today revolves around what happens in Europe and what happens at the ECB meeting. And by that I mean what is announced in terms of the pandemic purchase programme and the extension and the size of that over the course of today. That'll be a key thing which will, I think, really give us further direction as to how the European equity markets and also the sovereign bond markets in Europe's behave. So that's something that'll come out around lunchtime, and we'll hear from the ECB then. So that'll be an important indicator for markets. I think a little sort of snippet around that, which I find quite interesting, is just a further fiscal support package that came from Germany yesterday. And I touched on this yesterday, that there was an expectation it would be some 50 to 100 billion euros, and indeed it actually came out ahead of expectation, which is quite surprising. So 130 billion euros, that's on top of the previous 750 billion euros that Germany announced in March. And interestingly, within the support package that's been announced, there is a reduction in VAT from 19 to 16% through to the year end, so to try and stimulate the economy, to get the consumer to go out and purchase. Also a focus on the green agenda with subsidies for electric vehicles, etc. So further stimulus, and that maybe gives an indication as to how Germany's attitude is ever so slightly changing, and maybe we will see something more concrete coming out of the ECB, but then more importantly coming out of the EU discussions later in the month. Those are a number of the things that we've been discussing today. Please join me again tomorrow when we'll reflect on what we've heard from the ECB today and how that has impacted the European markets. Thank you very much.